All right, Mohit Chopra, Close Club 15. Let's get it.
All right. All right. Thanks, everyone. Thanks, Jake and Gino, for the opportunity to share. This is, I think, fourth deal since joining Jake and Gino. And again, something similar to Aaron, the story we had earlier start. But again, the main reason we joined for all three aspects. I still remember it took me 6 months of call with Scott before I joined the group. So I were very skeptical. And again, the history behind, and Gino is laughing because Gino has been part of two calls as well before I joined, because I had my skepticism before joining the group. And it's been 2 years, and I'll go through some of the stuff of what we
Was
learned.
it because Gino was wearing the Untuckit shirts and you're like, a guy, if he's really claiming this success, he should be buying nicer clothes than that? Is that what it was
Right.
about? Or
Yes, yes, exactly.
yeah, I knew it.
Well,
I knew it.
I remember, I think, don't know if Mohit remembers, but I remember meeting Mohit in person at MM5. And I
Yeah.
remember there were a couple of partners, and he's probably saying, "This is too good to be true. I don't think these guys." And I remember the whole conversation. And listen, there should be skepticism because there's a lot of educators and a lot of groups out there that promise and try to over promise and under deliver. And you should go out and do your homework. You should, when you select a group, resonate with that group. You should say, "Hey, listen, Jake and Gino practice what they preach." And
Hmm.
Jake and Gino will get on phone calls with you. And you both have my cell number and you both have called me multiple times. And I want to be there for you because real estate is one of those businesses when you need a bit of advice or you need something about due diligence or you need something about closing a deal or can you introduce me to an investor? That's what I'm there for. That's what the community is all about. And getting on calls with your coaches to make sure that your underwriting is conservative and that you're not missing anything and that there may be a hole. We're here to poke holes and to make sure that you're looking at things holistically and making sure you don't make mistakes. There can be some skepticism sometimes because it does sound too good to be true. But once again, I'll say the same thing that I said about Aaron that I'll say about you, Mohit. You came to all the events, you did the homework, you did the underwritings. You've done tons of property tours. You've put in the work. So it goes hand in hand. Selecting the right group is important, but also putting in the work is just as important as selecting the right group.
Right. Absolutely. And so this is just a brief intro on the team. Again, this is my partner, Mariana. She was the reason we got this deal because of her connections. So we'll delve a little more into it. And we had a little bit of fun between us in terms of putting an intro of each other, right? Like, so again, she has completely different complementary skill sets versus me, right? I'm more on the operation side, and she's more on the design and the rehab element, right? So we complement each other really well in that aspect. And then she wrote in because the multifamily investor with the most drive, because I like to drive as well. So I go, like, I know, Gina, we have talked about this, like one of the operational element is to be able to visit your property at least once a month. So even though most of my assets are in Ohio, Tennessee, and other areas outside of Pennsylvania where I live, I do drive every month. So that's part of the reason it's a little pun here.
Awesome, dude. Get in the
I
car.
like bricks and townhome too, though. So I tend to like her as a little more. I'm just saying.
Yes, yes. So that's the other piece we both love townhomes. She has more affinity towards brick as well.
So,
Um,
so after 6 months, why Jake and Gino? Took you 6 months, calls with Scott, two calls with Gino. What made you a convert?
so first thing I will say something really positive about Scott. Like every time we had a call, he gave me all the answers and never pushed as we got. I did talk to other groups as well. It never felt like a pushy sales kind of a call. It was always about what can they help out and what challenges I'm facing and things that whether G and Gino can help out or not. Right. So it was very different call than most of the other groups. I think after joining, everything that I expected has been above and beyond of what I expected. So even though I did to take 6 months after joining, like the first thing I would say is the personal coaching, right? No matter how many times I've reached out to Bill Ham, he's always been there helping out. No matter whether it's a phone call or it's an actual 1 hour session that we have on our coaching calls. The second thing, I had heard about the buy right, finance right, and manage right. And Aaron highlighted a lot of aspects with regards to the manage right component, which is certainly a big part to it. But I think from my personal perspective, I think I have seen a lot of people fail in multifamily because of the financing piece too. So I think that aspect of having that longer
Especially in the
runway,
last cycle.
especially, yeah, exactly. And especially when I joined in, I mean, I've been investing since 2019, 2020, but that time frame, you see a lot of people taking heavy bets on short-term debt as well. So having that longer runway that you have always preached about is certainly a key aspect of success as well. And again, I'm not undermining the operational element because that's the only way you can create the value at, right, for your deal. So
Hey, and we're
understand.
not here. We're not here like hating on the buy aspect of it either. It's buy right, manage right, and finance right. If you look across the price that we paid per unit over the last 10 years for from some what in my opinions for some very nice assets, it's typically sub 100K a door. So there's that piece too. I am not discounting that in the least bit because that ultimately rolls up in your cash flows over time.
But I
So
love how
Right.
both students have had different perspectives. I think, the finance component is really, really important. And the fact to get on and understand that there's different tools, whether it's a credit union, whether it's using community banks, whether it's syndicating, learning it, you're trying to learn the entire business model of multifamily and learning all the different strategies and then learning when to implement them and how to implement them. And just one thing on Scott, real quick. Scott isn't just someone out there just being a salesperson. He's an advisor because he owns multifamily. He can talk about multifamily at a really high level because he's invested in our deals and he understands it. And he talks weekly with me on strategy and how our portfolios are doing and how the owner draws look and why this month one deal didn't perform and this other deal did perform. So he can speak at it at a very high level because he's an investor himself. And I think if you're out there and you're promoting something, you're promoting a product, I think you have to be an investor or
you
a
should be a
buyer.
consumer of that product, right?
I agree 100%. And that's what makes him, a great asset to be able to talk to.
Right. No, I absolutely agree. And the last aspect I would say, like, I know people joke about Gino being like the dad that they have in multifamily. I mean, that's what it feels like because again, the level of proudness that you have in terms of your student success, I think that's unmatched also. I think a lot of other people, I have friends with few other investors who are part of different groups where it has been actually very challenging to keep, I guess, the mentors away from their deal because their focus is more about how they can make more money rather than the students. So I think that has been totally different scenario here. I think the level of camaraderie and the teamwork that we have or the help that we get between the community is immense as well. And I think that comes down, if you think about from a leadership perspective, it's like the way you build that community, Gino, it's an accreditation to that. Like people are doing the same aspect of helping out
It's been
without
very
having.
hard, Mohit, because it really needs an abundance mindset. And I've taken me a long time and a lot of years to work on that. And I used to be the pie is half full or the glass is half full and there's only 8 slices in a pie. And I've grown to learn that there's only so many deals that Jake and I can do. We can only buy so many deals. And for me, creating impact for guys like you, I'm not only changing your lives, I'm changing your family's lives. And I want to be a steward to my children. I want to be a role model to my children. I want my children to go up and say, hey, dad did a great job. And that's what part of my legacy I want it to be. It's not just about signing up students, but it's about signing up students who have the ability to close deals and that I can help them. That's what drives me. That's what makes me get up in the morning and go to work and want to do this stuff because it's great myself owning assets and growing the portfolio. Jake and I can only do so many deals a year because we're not syndicating, and I'm fine with that. This is just an extension for me to use the skills that light me up. I finally found something in my life that I enjoy doing that I'm pretty good at doing, and that's why I show up every day for the community because I really like it. And I really want you guys to succeed, and I see as a parent and having the financial intelligence and being able to have you guys teach your kids that it's not only affecting your generation, you're affecting the next generation. And we need more people like that out there to be able to teach their kids this stuff as well.
Right. No, I agree. And thanks again. So let me go a little bit. This is the latest deal that we've closed recently. Like I said, this is number 7 for me personally, but third one after joining Jake and Gino. So again, like Jake was talking about, you can see it's a brick townhome style unit. So 21 units total, 18 townhomes, along with 1 duplex and a single family. So the story with the single family is a funny one. Originally, the deal was for 20 units. So it was 18 townhomes and a duplex. As part of due diligence, we identified certain aspect that needs to be taken care of. So it was approximately about 150 grand of work, additional work that was discovered. So we went back to the seller and as part of negotiation, similar to what Aaron was talking about, asked them what's the fair thing to do here? Because you can see this is not what we anticipated when we went into under contract. So the story with the seller was that they are trying to dispose of their portfolio in the area because they're retiring. Well, actually, no, sorry. The person who managed that, he died. So the widow wanted to dispose of all the assets because she can't manage by herself. So we were working with them and they came back with a counter that, yes, the estimates, they actually verified the estimates, first of all. Like they had their guy go in there and check out, and they verified the estimates were correct. So they actually propose, instead of reduction, they will just give us a one additional single family residence that is part of that community for free. So
We're just going to throw in a house, Monopoly style.
yeah.
What do you want? Boardwalker Park Place.
That's the price of admission for Jake and Gino. I'm just saying, right then and there, you went down, you did your due diligence, you trusted, but you verified. You came in with a real ask. You knew where you are in the market cycle. 2 years ago, they might have told you to fly a kite, but today they're more receptive. You understood that it was a motivated seller. They wanted to sell this. You were fair with them. You gave them the numbers. You didn't overestimate it. They came in and said, you know what? This is fair. What's my next step? I can go out and try to get another buyer and start the whole rigmarole over again, or I'm dealing with Mohit right now. I want to close this deal. This guy seems fair. He's not lying to me.
I love this so much. This is the first time I ever heard someone say, "Hey, we're just going to throw another house in to satisfy you here." Toss it in here, and it helps the price per unit, right? Like,
and I know Jake. I know Jake's looking at that. I know he's scrolling down. I know he's seeing 2 beds, 1.5 bath townhomes, 1,000 square feet. I know he's seeing in washer, dryer hookups. I see the don't get drool on your.
I saw Aaron's a 73.
You're excited.
I was already drooling, and now we see 63. So, like, do we get a third guest tonight? Maybe they get down in the 50s. You know,
I mean, this is amazing. Like, this is your buy box. This is an incredible price point, an incredible value add opportunity. You said your partner had bought it. When you saw this deal, did you think this deal right away, or were you hesitant upon it? What did you think when you found the deal, when you saw the deal?
So again, just by the sheer numbers, like the basic numbers, if you look at what's the per unit price and what's the market rent, right? And again, based on our experience now, dealing with townhome style units, especially the lower expense ratio, because your utilities are all individually built, we know what we can operate at. We know what the value of this post-stabilization, post-rehab will be. So instantly we know it's a good deal. And again, my partner is more conservative than me anyway. So when she brings a deal when she thinks that it's a good deal, I know that it's going to be a good deal anyway. But I mean, still verify the numbers.
This is not an in-depth underwriting with these types of numbers, right? Like,
no. We had our in-depth underwriting as well.
No, I know you have it. I'm just saying, like, you can just look at this and you know, like, if everything else checks out, like the area is good, you know, the median income, etc. There's not a hole in the roof or something, you know.
You got a house for the hole in the roof. Don't worry about it.
I know. If there's a hole in the roof, we're still taking it. All right? We're not going to bust your chops. All right?
Awesome.
Yeah, I think that other aspect, like I said, like it's one of the only, but very few townhomes in that area, right? So, and then we looked at the demographic of the families, the number of families that are there, and it's right across the river or the bridge from Evansville, which is a major city as well. So there are a lot of positives in that, and the uniqueness of the property in terms of the townhome style units, which are very few in the area, that gives us a major advantage as well.
Awesome.
So the storage and warehouse space, is that an additional charge, or do you include that?
So that was included, and I think so. They had like a big warehouse. I don't know how many thousand square feet. That's just sitting there. There's like junk accumulated over the years, and I've
seen it before. Yeah.
So for us now, that's an additional storage area. What our plan now is to divide it into 8 or 10 different units and put it like individual storage spaces as well.
And what are those rent for? 75 a month or something, or
75 or so? Yes.
Yeah.
And those are the kinds of units that Jake likes to say that they are resident retention centers, because once residents start putting junk in there, they ain't leaving. They like it. They're comfortable. They're not going to leave for a $25 rent increase because they don't want to pack up all the junk and go somewhere else. But it's also, it's a great amenity. People are looking for it. And if you can offer it on the property, you'll understand. And adding another $75, times 10 units, it's another $800 a month, another $10,000 a year. At a 10 cap, it's 100 grand in value. At a 5 cap, it's another $200,000 in value that you've added on this property from somebody neglecting a warehouse. So that's phenomenal. That's amazing.
But everyone talks build to rent. This is, to me, like it's like halfway there. Okay, you got townhome style units upstairs and down, washer dryer hookups. We're creating storage space for the residents. Okay, this is great. I love everything about this, and you're in it at a extremely reasonable price per unit.
Yeah.
I don't want to say cheap. I think it's reasonable.
Affordable.
Yes. So in terms of business plan, I think, so we have 8. So the way that it's spread out, we have a 8 unit in one line, we have 6plex and a quads. So for the 8plex, because these are a little bit larger, like 50 to 75 square feet larger size units, so we are going all in terms of the level of renovations. And we're going to try to test the market. I think conservatively, we should be able to get 1,100 to 1,200, but again, that's something we will test. And we have 2 other deals where we have tested the market, and we have actually gotten more than what we anticipated as well. And for the remaining units, we go like a mid-level rehab. We do have some exterior improvement that needs to be done. The properties, in terms of landscaping, improving the signage, and there's no signage currently, so put some signage. A little bit on the uniformity across the property as well, so we improve the exteriors. Speaking of roof, yes, there were roof repairs as well, Jake, so we will take care of that too. But in terms of high-level numbers, so we are at 1.33 purchase price. Our renovation's around $350K, which includes the exterior as well as the interiors. And there's, again, the renovation costs a little bit higher for the duplex and the single family, just because of the larger size. I mean, these are not 1,000 square feet. These are, single family is about 2,000 square feet, and the duplex is about 17.
How close is the single family to it?
It's right there. It's the same block. So I don't know if I can show you here.
That's beautiful.
Yeah, it's right next to it. So
are you going to flip it out as a
that's the plan.
A sale?
Yeah. So that is the plan. Like once we get to refi, maybe we just sell it off separately after the rehab is completed.
Yeah.
Now,
with that being said, do you keep the resident in there, or do you renovate it for a prospective homeowner, like a single family homeowner?
So we, for single family, we haven't started the execution yet. So we will have to talk to the resident on that one, because that's a unique thing that we never really have done single families by itself before in terms of rehab. So we don't know. And normally for other units, what we normally get is, and even on this property, we had 3 vacant units. So we started with those 3, and then we start giving the options to the next 3 existing tenants, whether they want to lease the rehab or they will have to vacate, because all of these. So the other aspect that worked out, okay, I mean, it's a little bit of risk, but gives us advantage as well, is that all of the tenants are month to month. So we can execute.
I don't mind that going in, especially if I'm going to be renovating everything personally.
Exactly.
Yeah.
So that's what I was saying. Like, it's an advantage for us, because now we can work out the renovation plan and execute it on a timing. Otherwise, you are stuck, and then you have to take a break in between the leasing ends and all that stuff. So
yeah, it would be kind of interesting if you renovated all the apartments and then you kind of got down to the single family home, if it's not necessarily contiguous, and then renovated that for a homeowner, staged it, and then maybe sent that one off, since it's a little bit different. Either way, I think it's great.
Right.
I mean, you're not gonna go wrong. But
hey, Jake, and Mohit, Debbie asks, what's the ideal size for each storage space, or what size would you get for $75 a month? I know, Jake, we have certain, it really is market specific, but I mean, best thing would be go to a storage facility in your market and take a look at what they are, depending on the size building that you have. Also, I mean, certain properties may do better with smaller units. Some properties may do better with larger units. We've inherited properties with garages that can get $150 a month. So it really depends upon the market itself. But what do you think, Mohit, on this property? If you're going to get, 8 to 10, what size would they be?
So this is again, we still have to do our due diligence in terms of the execution on business plan for that one. To your point, that was our next step. We are going back in October to the property, and as part of that, we are visiting some of the storage areas, or storage units across, and see what the normal sizes are across those. And based on that, we'll make our decision on the business plan for storage units.
Love
So
that.
yeah, it's very market specific for sure. In terms of the financing, so we got a local bank again, because that works really well for us. We got 80% on the purchase, 80% on the rehab. And then we had the option, we had a lot of investors who wants to work with us. So we had finally given the opportunity to one of the debt partner who came in and we're giving him 11% for 18 months. Now, again, we are able to afford it just because of the sheer numbers on this deal. So we know that we're confident. Based on our prior experience, this is, like I said, fourth asset that we are turning over in a similar way. So we have processes in place, and we are confident in terms of delivering on the plan. In some cases, we have brought an equity partner where the risk might be a little higher. But in this case, because the risk is low, we can allocate 11% interest to a debt partner. Rehab time 15 to 18 months, but we anticipate 12 to 15, again, conservatively in terms of when we underwrite it, when we do financing. So we work on more conservative side.
And that is conservative because that's around a unit and a half turn per month because you're doing 20 units. So if you're focusing on this, that's something where it's very easily achievable in this part of the market cycle.
Right. And one thing I would say also based on our experience is the first 2-3 units take longer. And if you have the same crew going one after the other, it just becomes much more quicker because they get so used to
they need they need a few at bats and momentum, and then they definitely start going much faster. It's been my experience as well. Yeah.
Right. Especially because these units are identical across, minor differences in sizes across the 8-plex and 6-plexes, but it's still similar townhome style units.
One of the benefits of multifamily, they're all boxes. All you're doing is buying similar boxes. Love that.
Yeah, so our anticipation based on the NOI, based on the current rents and the future rents, we are expecting this to be around worth 2.7. So we purchased for 1.3, put in 350, all in at 1.68, 1.7. It will be worth 2.7.
I'm just answering a question on here.
Sure. And again, these are just the pictures of some of the other properties where we have done the high-end rehab just to showcase. Sometimes we keep hardwood flooring, sometimes we have LVP, but mostly shaker style cabinets, black hardware, or matching the granite countertop and stainless steel appliances.
It looks really good.
Thanks. So in terms of lessons learned, the first thing I would say is like be patient. Yes, this deal took 9 months from the first contact to close. Like I said, multiple things occurred and a lot of negotiations happened in between as well. And a couple of times it seemed like the deal might not go, but again, persistent pays. Second, certainly is take quick action. So in terms of execution, asset management or turnover plan, we had our original plan was to utilize our property manager because they have their in-house contracting team in place as well. But when they gave us their estimate, they were exorbitantly high based on what we have been doing and using for our other assets in Ohio. So we actually improvise, talk to our team, and we actually are using the same team from Ohio to manage this in Kentucky as well.
Cool.
So change of plan. Sometimes you have to make change to your plan based on what works or what doesn't work.
And I would just stress so much, and Gino's about to talk about his barn here in a second. You can get multiple quotes right now And we even switched fencing contractors. You know, we do a lot of dog parks
Mhm.
in our communities. And we saw the price go up, and we said, wait a second, this doesn't add up. And we got the typical, oh, supply costs are going up. So we went back out to the marketplace. Our costs now all of a sudden are down about 25%, from what this guy tried going up to. So we got actually better than what we were getting before. And I would really stress right now, especially contractors, are getting back much quicker. Timing is much quicker. Pricing is getting more aggressive for the purchasers. So I would just stress anybody that's out there right now, get multiple quotes for any job. And Gino, are you going to talk about the barn or no?
I can. It's one of those things where it's a lot
Gino,
of
let's
work.
talk about the barn.
Well, it's one. I had a Jake Senziano moment. I had a proud moment because it's been rough over the last couple of years, especially in Florida, with all the supply chain issues, with all the building and the oversupply, and there's so much demand. This renovation that I've had, that we bought a house in the last 6 months. I've had much better pricing. I inherited a barn on this property. It's rusted. It needs work, but I mean, to build it brand new, it probably cost at least $75,000. So I went out and got a few quotes. One person quoted me 30. One person, I'm still waiting on the quote. It seems like an over daunting task. Another person gave me a quote for 30, but then came back to me last week and says, I don't think I can do it for less than 60. And I'm like, bro, I can build the thing for 75. So I finally found the gentleman named Phil. He came out.
Everybody's going to be Googling Phil now.
He looked at the building, and he's a professional. He knew exactly what he was doing. I'm like, is this a lot of work? He goes, no, it's a little bit of rust. I'll sandblast it. I'll put a little zinc paint. I'll change some panels. I'll paint the red outside for you. He gave me a price, $12,000. So was it worth me talking to 4 different contractors and spending maybe 5 hours of my life to save at the very least $20,000? I would say so. And that's what it takes to run a multifamily business, to go out there and get multiple quotes. And I mean, what a difference between 30,000 and getting someone who's professional and can do it all in house. He's vertically integrated as well. He's going to sandblast. He's going to paint. He's going to grind. He's going to weld. He's going to do it all. And it may take a little bit of time. And that's why, as you're doing the business where you're getting to the scale of a Mohit and an Aaron, you may not find that on your first deal, but getting involved and getting more bats, you'll get a lot better at this process and at this business.
I think we got some work for Phil when he's done with your barn. Send him up.
I will send them up.
Yeah, and again, like I said, so we are not in-state investors. So unlike Jake and Gino, where you are investing in local market, our investments are in Ohio, Kentucky, and other areas, right? So apart from for asset management, we go visit the property at least once a month. But for rehab, we have a good team in place. We trust them, but we verify. So we have our weekly calls with them in terms of the renovation, in terms of progress. And anytime we have any setback, we have a separate call with the owner who's working with us on these deals. And we try to do some course correction as well. So
That's awesome. Trust but verify.
Cadence of accountability. It's very important.
I agree.
yes, absolutely. So where we are, like I said, so we are refinancing 2 deals right now. Completed our business plan for the 2 deals that were complete, what we acquired in 2022. Currently, like I said, for this particular deal and the other deals, we are we're starting the rehab already with 4 units. For the remaining 21, for a total of 21, within 12 to 18 months, we should be done. And we're working on 3 other deals in the area within Ohio, Kentucky, and Tennessee submarket as well.
That's awesome.
Presenting some more opportunities for debt investors.
And I hope the next slide, well, this is once again, click on that QR code if you want to learn more about how to work with the Jake and Gino community. October 25th to 27th, we're having that event in Denver. And hopefully for the last slide, Mohit's got his contact information. If we haven't answered anything on here, if you want to become an investor with Mohit, if you've got a deal and you say, hey, Mohit, I've got a deal in Cleveland or I've got a deal in Kentucky, how does this look? Let's partner up. There's his phone number right there. There's his link tree. Aaron's got to get a link tree up there. And there's his email address.